No, sell it all. Yeah, 3x leverage. All of it. Sell all of it. Yeah. No, they're never going to. I've been telling them it was bullish. No, they're never going to know. It's all good. The camera's on? I got to go. Sorry, that was my dry cleaner. All right, guys. So over at Grayscale, business has been booming for Wall Street's go-to for Bitcoin exposure. All right. In a new interview, Grayscale's head of investor relations, his name is Sharif-Askary. He revealed how hedge funds and other financial institutions have recently poured as much as $1.7 billion into Grayscale's Bitcoin and crypto funds, right? So there is a new episode of the Coin Scrum, I like that name, market podcast. And in this interview, Sharif discussed Grayscale's soaring volumes and how the cryptocurrency broker and custody service provider now has almost $4 billion in total assets under management. And that's a huge jump because I believe they had 2.1 billion in May of 2019. And then it was 2.2 billion in early 2020, the last time we talked about this. But of course, we've seen this massive surge of retail interest over the last few months. Here's the CoinScrum Markets podcast. We'll link this in the description down below if you guys want to give this a listen. And Grayscale's assets under management reports are here, okay, are available on their website here if you're interested in taking a dive into these numbers yourself, okay? But what their volume data reveals is that average weekly investment across all of Grayscale's different trusts, right? They have different trusts for different cryptos, has increased by about 800% over the past year, going from about $3.2 million per week that investors were allocating to trusts for, managed by Grayscale to now about $30 million per week at this point in 2020. That is insane. So we have to ask, why is there this sudden surge in interest for Grayscale's offerings? We don't really have to ask. Come on, it's Bitcoin. They're scared about the market. They want to hold hard money, right? But if we want to quote Sharif himself, he says that 2020 has been he said that 2020 was a year characterized, as we all know, by massive instability, macro instability, and this unprecedented monetary stimulus, printing of money. This is debasement of the currency, right? And institutions are not blind to the vagaries of history, to the debasement of currency and what happens. This is late stage nation stuff where, war, famine, and death tend to follow, right? And what happens is the economy blows up and gold and silver, hard money comes back, which generally it was just gold and silver, but now we have Bitcoin. Hard money comes back and its value gets bid up to match the value of the overinflated economy. And hedge funds and institutions are no stranger to this, and they want hard money to weather the storm, right? But it's been a record year for Grayscale, right? A record quarter for them, right? They've never seen demand like this ever before for their products, right? And a lot of their new clients are traditional hedge funds diversifying into cryptocurrency in a very, very big way, right? We've seen trickles earlier, but this is big. Big allocations are being made into cryptocurrency, right? According to Grayscale and these reports, of the 90% of clients that come from institutions, half are multi-strategy hedge funds, which a little bit more complicated than just the other portion, which is just long short hedge funds, which hold concurrent positions and drop the losing leg off as market prices go up or down relative to whatever algorithm they're running. Multi-strategy hedge funds can run high frequency trading bots. They can actually have proprietary desks where traders actually trade for them. And they direct traders to trade different commodities or different assets in different directions so that they are overall hedged. A lot of different ways. They can also engage in, just literally you name it, right? If you want the avant-garde of experimental trading, it's multi-strategy hedge funds, right? Now, on the CoinScrum podcast, Sharif was asked if investors are increasing their exposure to Grayscale's products through 401k plans, right? Which had previously been Grayscale's kind of promoted bread and butter project since they opened their doors in 2013. And they said that yes, accounts, particularly those that are tax advantaged, have always been and will continue to be the primary vehicle for high caliber investors. And the reason why is because that allows high caliber investors or high net worth individuals to invest in cryptocurrency without having to custody it themselves, right? This is an issue for institutional investment into Bitcoin. They do not want to do self-custody. They want somebody to do that for them. And that is kind of anathema here in Bitcoin land, but that is just the way that it is. They want to own an asset the same way that they would hold Apple stock. They have cash, they've got the money, they want to allocate it and have ownership in something, but they don't want to have to deal with security or ownership or privilege. And that's the way that things work in traditional land. So this is why custodial solutions and a lot of investment capital is being poured into this. And as much as we may not like that, and as much as we may know that not your keys, not your coins, I don't see this trend ending initially, but that's okay, right? Jack pointed out some good things yesterday about this Ameribor project, right? Which is looking to kind of replace, it's blockchain based, it's Ethereum blockchain based, and looking to replace kind of the LIBOR system, right? The interbank interest rate system. So Jack pointed out yesterday that while it's not really the conversion from the banking sector that we deserve, maybe it's the conversion, the foot in the door that we need, right? To allow them to, like regular human beings or regular institutions, like slowly, gradually ease into something, right? Do you remember like when personal computers came out, how long did it take for them to be widespread in businesses? But yet to this day, you have thousands and thousands and thousands of IT professionals who, as intelligent and skilled as they are, typically teach people how to use fax machines. Well, maybe printers nowadays, right? Or get QuickBooks to work. So technological progress is slow, right? At the end of the day, investors, I think particularly institutional investors and all investors really are looking to gain exposure to digital assets. And as I said, with institutional investors, they want to do so in a way that means that they don't have to do self-custody, right? Now, over the past year, $390 million from these investors went into Bitcoin via Grayscale, while 110 million has gone into Ethereum, right? Also, when asked, he said that about 38% of their clients held more than just Bitcoin, which is up about 9% from this time last year. So still, the majority of their clients are only interested in Bitcoin, but a little less than 40% of them are beginning to diversify. I would assume that of that, the majority of them just hold some Ethereum. And then I would say that the very smallest portion of that might hold some diversification of some other tokens that they offer. So as for what she thinks is behind the unprecedented growth in investor interest, she said the policy implications of COVID-19, of course, right? Institutional investors are actively seeking scarce assets that could be used as a hedge against inflation in a world where we are being faced with unprecedented monetary stimulus. And by monetary stimulus, that means inflation of the currency supply, right? Debasement of the currency. That's what it means. That's what it is. And because we do not really see any end to the economic turbulence in sight, their expectations, at least at Grayscale, is that this investor interest is going to continue to ratchet up in the coming months. So maybe the best possible year on record ever, meaning that, good time to be involved with Grayscale.